Ever wondered what drives the value of a cryptocurrency? Fundamental analysis holds the key. When we talk about fundamental analysis, we're referring to the process of evaluating the underlying factors that impact the value of a cryptocurrency. Think of it as doing your homework on the crypto project you're interested in. For starters, you'd look at the project's team. Are they experienced? Do they have a track record of success in the crypto space? A strong team can often steer a project towards success, even during turbulent market conditions. Then you'd consider the technology. Is it innovative? Does it solve a real-world problem? Remember, a cryptocurrency is only as good as the technology that underpins it. Partnerships also play a crucial role. A project that's partnered up with reputable firms often has a higher chance of achieving its goals and thus a higher potential for value growth. Next, you'd look at the market potential. How big is the problem the project is trying to solve? The bigger the problem, the bigger the potential market, and the higher the potential value of the cryptocurrency. Finally, you'd evaluate the adoption rate. Is the project gaining traction? Are more people starting to use the cryptocurrency? The higher the adoption rate, the higher the demand for the cryptocurrency, which can drive up its value. By understanding these factors, you can gain valuable insights into a cryptocurrency's long-term prospects. A cryptocurrency backed by a strong team, innovative technology, strategic partnerships, a large potential market, and a high adoption rate often has a higher chance of succeeding in the long run. Remember, fundamental analysis is not about predicting short-term price movements. It's about understanding the long-term potential of a cryptocurrency. It's about looking beyond the hype and understanding the substance. Remember, a strong project backed by an innovative team and technology often has a higher chance of succeeding in the long run. While fundamental analysis looks at the why, technical analysis focuses on the when. It's a method that allows traders to study price action and market trends to predict future price movements. This is achieved through the use of charts, patterns, and indicators. Imagine this as your personal crystal ball, giving you a glimpse into potential future market behavior. Charts are like a storybook of a crypto asset's journey, painting a picture of its past and potentially its future. Patterns, on the other hand, are the rhythm of the market, the recurring themes that can give you a heads up about potential price movements. Indicators act as your compass, guiding your decisions on when to make your move, to buy or sell. But remember, while technical analysis is a powerful tool for timing your trades, it's just one part of the equation. In essence, technical analysis can help you time your entries and exits, but don't forget to consider the fundamentals. Successful crypto trading is not about choosing between fundamental and technical analysis. It's about using them together. Let's take a closer look at how these two powerful tools can be combined for enhanced trading outcomes. Imagine you're a crypto trader. Using fundamental analysis, you identify a cryptocurrency with a strong team, innovative technology, and promising partnerships. You believe this cryptocurrency has excellent long-term prospects. But when do you buy? Here's where technical analysis comes into play. By studying price action and market trends, you can pinpoint the perfect timing for your trades. Maybe you spot a bullish trend or a particular chart pattern that indicates it's a good time to enter the market. You see, by using fundamental analysis, you're assessing what to buy based on a cryptocurrency's potential. With technical analysis, you're determining when to buy based on market conditions. By taking a holistic approach, you can get a comprehensive view of the market and potentially make more profitable trades. To master the art of crypto trading, you need to harness the power of both fundamental and technical analysis. Remember, fundamental analysis is all about understanding the inherent value of a cryptocurrency. It gives you insights into the long-term prospects of a project, focusing on elements like the team, technology, partnerships, market potential, and adoption. Technical analysis, on the other hand, helps you decipher the short-term price action and market trends. It's your guide to identifying the best entry and exit points for your trades, based on patterns, charts, and indicators. But the real secret to maximizing your crypto trading profits? It's in the artful blend of both these techniques. By merging fundamental and technical analysis, you gain a comprehensive view of the market, allowing you to make more informed and profitable trading decisions. For more valuable insights and tips on maximizing your crypto trading profits, don't forget to subscribe to our channel. Before we wrap up, we have one last crucial step for you. Don't miss out on our latest tips and insights. If you found this video useful and want to continue learning with us, hit that subscribe button. Join the Crypto Trading Masterclass community now. We're constantly updating our content with the latest market trends, trading strategies, and investment tips. By subscribing, you ensure you're always in the loop with the crypto world. Remember, knowledge is power. And in the world of crypto trading, it could mean the difference between a profitable trade and a missed opportunity. So don't hesitate. Subscribe today and take your crypto trading skills to the next level. We look forward to seeing you in our next video.